Davin and Atuksha Poonwassie, and they are the founders of Simple Crowdfunding, and they're really highly experienced and knowledgeable property investors and business experts. So welcome both. It's absolutely fantastic to be speaking with you.
Thanks for having us.
Thank you.
So
great to be.
I know I know we know each other really, really well, and it'd be great just to find out a little bit more about you in terms of how it all started for you. What were you like sort of growing up? Were you quite entrepreneurial, or were you quite business minded?
Do you want to start?
Well, it's a bit of a mix, really. Sort of academic parents. Went into academia, but whilst I was at college with my brother in the final year, we did actually buy a house and rent it out to housemates while I was there. So kind of that entrepreneurial flair and property interest started quite early. Then pretty much just went into industry and did that for quite a while. That went okay. Then eventually went contracting, which was the first, again, back into that running your own company, doing your own thing. Okay, it's a one-man band, but it's still...
What is it that you did at university?
IT. So, general IT, more on the technical side than the business side, and ended up doing lots of data analysis and quite deep sort of network jobs, and moved through that, and eventually ended up doing databases for some very large organizations, which ended up using lots of project management skills to get global connections and sorted and all of that. So IT, very, very broad, but in some areas very deep IT experience. Went through contracting, and that was part of the entrepreneurial, starting your own business and all of that. And that's where we thought, right, we're starting to create surplus cash now. Time to get into property. And we did that. And that takes us up to where we started to get into crowdfunding. But I'll let Atuksha sort of bring up to that stage as well. And then it's the two of us crowdfunding together.
So my background, my degree was actually in health studies with psychology. So we were the first to do health studies. So it's a very new course, but actually it's really interesting. And it allowed me to sort of transfer my course over. So I spent some time in Amsterdam and then also Berlin. So it was great whilst I was studying, and I absolutely adored it. Part of the work I then did was I used to work for a health promotion unit. So that's basically where I started. And it was basically doing health research. So it's identifying challenges in the marketplace, analysing data behind it and all of that. So I am very analytical. Got a bit fed up of that because by the time we'd had an idea and we wanted to do some research, because of all the red tape in local authority, it just took forever. And so got a bit bored of that. So then I thought, well, what do I want to do? And I started actually working for an analytics company. Because I wanted to understand more about the numbers, and spent a lot of time on things like data mining and that type of thing. So this is like 25 years ago or thereabouts. And
you're saying there was red tape then. What about now? It's
I know, exactly. That's the beauty of it. It's like teaching people. We were teaching people then what to do from a data mining standpoint, and data was quite, I believe data is the crown jewels of any business. And so if you use that data in an intelligent way, it absolutely gives you advantage over others. And there is so much information that data tells you that the business is just not aware of. And it's a wonderful thing to be able to decipher and see. So I absolutely love that space. From there, I sort of moved into CRM and set up a CRM consulting business about 20 years ago with a very dear friend of mine who was actually a client at the time. And that sort of goes on to the CRM part. And again, it's all using sort of data and understanding what was happening. And actually some of our clients, so our first client was Eurotunnel. So we were very, very fortunate to have them on board. And we've had some amazing clients around the world and just absolutely love that space, because ultimately it was all about helping companies build meaningful relationships with their customers, which is really, really important. And so we've just been using those practices throughout. And, you know, community has been in our blood forever. I am from a large family, and so growing up, it was all about everyone helping everyone. You know, we are business owners, and we've always had that mindset from the beginning. So, and it was just about everyone working together to achieve something amazing. So the CRM and analytics I'm incredibly passionate about. There is so much more data available now, which is even better. And people can do amazing things if they know what to focus on from a data standpoint, and helping to build really cool relationships with your customers, because ultimately you spend a lot of time at work, and it's always nice to work with people you want to work with rather than who you have to work with. And having meaningful relationships allows you to do that.
Yeah. Well, I mean, it's well, quite obviously your husband and wife, and you said it's great to work with people that you actually want to work with. I mean, how did that all come about? And I mean, how did you meet even?
We met when we were studying.
Yeah, up in sunny Preston. We met in halls of residence as I was moving in.
It was an old nursing home, and we were on the same corridor. And shortly after we left, the nursing home was condemned. It was an absolute nightmare. They had rats the size of cats and all sorts of random stuff. But actually, it was very interesting at that point in time.
Typical student accommodation.
Yeah, so you sort of bonded over your love of student accommodation.
Yeah, so that's where we met, and actually we've been sort of we've obviously had very different careers, but actually we've both always had the mindset of wanting to do something different. So and that's what we've both been fortunate enough to be able to do, to sort of support each other and to follow our passions in that regard.
Yeah. So to someone that doesn't know, what is crowdfunding? What is it that you do?
Crowdfunding. So first of all, crowdfunding has actually existed for a very, very long time. It's just had different names. So it's been regulated, not regulated, and in different places around the world and stuff like that. And really what it is, it's about people coming together, bringing funds together to make one thing happen. And the way we like to look at it is as a marketplace. So what's happened in 2014, the FCA said, we're now going to regulate this. We're taking over from the previous authorities, and we're going to create this space and a bunch of rules about how it works. And we're going to call it crowdfunding and peer-to-peer. And effectively, it's a place where a fundraiser, in these circumstances, typically a developer, can set out their stall saying, here's my project, here's me, here's my experience, here's what I'm going to do. And people can come along and decide if they like that product or project and they want to put some money into it. The nice thing is, it then allows people to come into projects with smaller amounts of money, because the crowdfunding process is scalable. So you can have lots and lots of investors with smaller amounts of money. So it democratizes, allows a lot more people to get into the process and get involved. And it scales up. And it actually makes a robust crowd for the investor.
Yeah, so I'm just going to take it back a step. So we came across crowdfunding for the first time in 2013, and actually we heard about it at a property event. So it was a training event we attended, and the person running the event, who was also a mentor of ours, basically said, crowdfunding's coming down the pipe. And when we sort of looked into it, we thought, you know what, you can build a whole community of people who have shared interests. We could focus on property, and property is a huge interest of ours. You know, we bought empty properties back to life. We built a fairly substantial extension in our garden under PD, which at the time was pretty substantial. It's 95 square meters. We've done buy-to-let projects, we've done a number of other things, and we've got overseas properties. So on that basis, it's like, we love property. No, crowdfunding is really new. So we could not only build a huge community of people who could invest in property projects, but we can also fund property projects. And so, and to be the hub of that, so we found out about it sort of mid-2013, and by the end of that year, we had our first authorization, which was for peer-to-peer lending. We extended on to equity shortly after that, or a while after that. So it allows us to build on our strengths, so CRM, on IT, on property. And so we were in our happy place, and we thought, this is brilliant. We have to follow it through. And so that's what we did. The beauty of crowdfunding, for all the things that Davin's spoken about, it also allows everyone to get involved in property. Property has traditionally been a marketplace for people who either have a lot of money or who potentially have a lot of time. And if you don't, the fact that you can now invest in property from £10, £100, whatever that number is, means you can start getting involved in property and finding out about alternative strategies, and be able to spread your risk. And that is at your own level. And that's the amazing thing about it from an investor standpoint. From a developer or home builder standpoint, we're helping to bring more homes to market. So, a lot of SME developers will have projects, and they might be a little bit quirky, but actually quirky is all right. And that's what creates variety and excitement in the marketplace. And unfortunately, a lot of the traditional lenders like traditional projects. And so if you then have SME developers who have these smaller sites, and and the developments might be a teeny bit quirky or something different, then actually these things would never come to market. And so by providing a platform where they can tap into investors who also have the shared interests and want to try something different, maybe, then actually that's a really good place. And ultimately it brings more homes to market, which is definitely one of the things that this country needs.
So you've touched on obviously the benefits for investors. I mean, is there a minimum amount that that you could put into a project as an investor if you're just looking to dip your toes in?
It's typically defined by the project, and with the projects we're seeing at the moment, the minimum amount tends to be between £500 and £1,000. We have had smaller. Those have been with projects which are smaller projects and a different risk level. But typically, it's between £500 and £1,000 per share.
It also depends upon the size of the project. And so if we're looking to raise £1 million, we're not going to have a share price of £100, for example, because it's not very manageable from an investment standpoint. We have done projects where the minimum investment has been £100. The developers were looking to raise a lot less, and the profile of the projects was more risky. So it was a planning game, for example, whereas the money's going into a planning game and the potential upside is huge, because if you get planning, that's where a lot of the upside is for property projects. But actually, if you don't get planning, the money's been spent, and so you lose your money. But what happens is, for those types of projects and for others, there's also a learning element. And so people then have the opportunity to learn on live projects by putting in smaller amounts into those projects. So they get to follow the developers, there are updates provided, there are site visits, the core documentation is shared, and a number of other things. So it's a really good way to actually learn about how projects go. And anyone who's in property will know that there will always be curveballs. And so it's also about how those curveballs are managed, and that's actually really, really insightful knowledge that's not necessarily gained from a classroom.
Yeah. And as an investor, what kind of returns would you be expected to have if you do invest in crowdfunding? Should everything go okay?
It tends to vary. So there's obviously the two sides, there's peer-to-peer and there's equity. On the peer-to-peer sides, those returns can vary anywhere from 6 to 12% plus. Again, very much depends on the risk element. Is it first charge, is it second charge, or even something else? And then on the equity side, again, the same thing. If it's principal planning gain, we don't do too much of that now. It can be quite a high return, but it is high risk. On a standard development project, it's going to be anywhere between 20 and 30% projected, based on hitting GDV, getting everything sold and or refinanced at the right rate.
And that's for an annual.
That's an
project,
annualized,
yeah.
an annual project.
Mm-hmm.
The key thing to remember is return tends to be reflected by risk, or risk is reflected by return.
Mm-hmm.
And just to elaborate, so when we're talking about peer-to-peer, we're talking about peer-to-peer lending, and so that's a loan. So I'm going to lend you £1,000 for an 8% return per annum on a first charge secured basis. So, and that's what I mean by peer-to-peer lending or peer-to-peer loan. On the equity side, it's like Dragon's Den. You're buying shares into a company that may own the asset and typically owns the asset. So you become a shareholder, and the reason that happens is the returns tend to be higher because there might be development finance on top, and they will take the first charge secured on the project. And so you then sit behind them, or maybe even behind a MES layer. So as an equity stakeholder, you would expect to see larger projected returns on your money.
Mm-hmm. Yeah. So thank you for clarifying that. That was just going to be my sort of next question. I know we've mentioned quite a lot of terms that we all use on a daily basis, but I'm sure some of the audience, this might be completely new to them. So really, it's sort of two sides of the service that you're offering. So we've covered the investor side. So essentially at the core of it, someone will be looking to deploy their capital into various projects, and that can be two ways really in terms of what they might do. So on the other side of things, for the developers themselves, I mean, how does that work? Just so the investor is sort of informed, or perhaps maybe there's some budding developers out there that are thinking, I'd like to raise some funds. Could I do it with crowdfunding?
Go on,
Okay. Yeah. So yes, there's a few things. That's a short answer. There's a few things that need to be in place to make that happen. And it's about people getting to know who you are, what you've done, building credibility, and that often sits behind a brand, which then fits into the longer term process of building your business. So from a developer perspective, it's helping developers understand that they need to think about their business long term, not just one raise. Now, for established developers, that's about making sure that they're visible, about the information is easy to find, easy to understand, and that they're accessible for conversations with investors. And that they're doing all of this in a very compliant way, because raising money is a regulated process. Doing financial promotion is a regulated process. So any marketing that has the intent of raising money is a financial promotion. So that's a regulated process. We're authorised to do that. We're also authorised to do that on your behalf, and we can authorise your financial promotions. So we get around and we know how to promote your brand and promote your project. Now, in the beginning, if people don't know who you are, it's more work, and we typically do smaller raises so that people can get to know the process, get to know you, and then you build the raises as you go. If you're new to developing, there's two ways you can get into this. You can invest with a developer who's doing the type of development that you want to do. So you get to know them, you get to see the process, you get a bit of an inside track on what's going on. You can also build a team of your own that has all of the experience that you need to do a development. Now, a lot of developers start this way. They'll come through a certain track, they'll have a certain area of expertise and experience, but they won't have the whole arena. And that's where you have to build a team. And you have to do that in any circumstance. Very rare do developers work on their own. They'll have a team around them that puts everything together. What would you add?
Yeah, the beauty of it from a fundraiser or someone looking to raise funds through for their project is there's a number of things. One is with regards to the financial promotion aspect and communication. Ultimately, if you're looking to raise investment funds from the general public, then it absolutely is a regulated activity, and that you have to be aware of what that regulation is. Now, you can learn it. That's one option, but actually there's an incredible amount to learn. And so, especially if you're raising funds from multiple people, it's always easier to go to the people who specialize in it, and crowdfunders do. So that's absolutely an advantage. And the regulation changes regularly. And so you then have other people who are keeping an eye out in terms of what's currently what's happened to date, what's in the pipe, and where they see this marketplace developing. And to have a partner to work with who will do that for you is absolutely advantageous. The second is about the brand building and getting your message out there. You could have the best product in the world. If no one knows who you are, it doesn't make any difference. And so the beauty of crowdfunding is it's very public. And so if you do raise funds through a platform, you have the opportunity, one, you're exposed to all the investors on the platform anyway, but the second is your brand and your message get out there very, very quickly. So the people who've raised with us, for example, they now have a wait list of investors who want to know about the next project, which is always a nice place to be. And rather than having a handful of people who are making the decision in terms of whether or not you will get finance or not, wouldn't it be wonderful to have 100 or 1,000 people who are participating in that decision? Because the chances are not everyone's going to rumble at the same time. COVID aside, that's a bit different. I get that. But even then, even within circumstances like that, it's a numbers game. And so it's always better to have more and more people who love what you do. It gets your message out there, and it really does help you grow. And then it's also a lot more fun if you can share that experience with your investors as part of the development of the project and things like that. People understand if things don't always go to plan, as long as you communicate it. And by being able to do all of those things, it just means it's just a lot more fun. And ultimately, finance is changing and has been changing in the UK, and it's always good to have alternative finance in your finance toolkit and have it available for you. It may not be suitable all the time, and crowdfunding is not suitable all the time, but actually there are lots and lots of times when it is very, very applicable to most property projects.
So I know you've mentioned sort of things not going to plan, and in terms of all the red tape again, it's obviously an industry that's really highly regulated. I mean, is there a way that you can mitigate risk? I mean, to someone that's perhaps not invested before through crowdfunding, they might think, oh, it's quite risky. I'm putting my money into this platform completely online. I don't know, where it's going. How do I know that my money's safe?
Well, to be honest, your money's never safe. That's the first thing, because ultimately investments carry risk. But what it does do, what platforms do, is they will explain the risk profiles on the platform, right? And as a platform owner and as the facilitator as such of some of these projects, there's a lot of work that Davin and I and the team have to do in order to make sure that the information that's provided, one, is clear, is fair, and is not misleading, right? And so there are guidelines that we have to follow. So in order for a project to even make it to the platform and be visible to everybody, there's a ton of stuff that happens in the background. Now, we don't share all of that because it's not appropriate to do so in some instances, but we will do things like credit checks. We evaluate the project. If someone says that they have done this project in the past, for example, then we will find out about it. And so there's a lot of information that we drill into in order to do that. As an investor, what happens is when you register on the platform, there's a number of things you have to do as well, because we have to also make sure that the investment opportunities are right for you. And so you'll go through standard AML checks. So when you register, and so providing your basic information, your name, address, date of birth, all that stuff, photo ID, and none of that should be a surprise to anyone who's set up a bank account. It's the same type of process. What's different is we then ask for categorization. So, and what I mean by that is investors categorize themselves as either a high net worth, a sophisticated investor, or an everyday investor. So if you're not a high net worth or sophisticated, then you're an everyday investor. And I'm talking about individuals. You can also register as a company or as a trust as well. So if you're a SaaS trust, for example, you can register as a SaaS trust. But they're slightly different, but you still categorize in each of those, regardless of how you're setting up your account. So that's the second bit. And the final bit is appropriateness. So we do have questions which you need to answer, and that will tell us how much you understand about risk. And the questions are, or all the information is available on the site, but we just need to make sure that you understand that actually if you get involved in a peer-to-peer loan, for example, how that works, and if you get involved in an equity project, how that works, and understanding the risk profiles behind it. So that's just the registration piece. And actually on the site, against each of the projects, you'll then also learn about, what's the project about, what are the financials, who are the team behind it, what's the exit strategy, and there's an opportunity to ask questions through a forum. So if you're not sure at that point, ask the questions. If you don't get a reply, don't invest. And it's pretty much that straightforward. So a lot of that information will be sort of managed up front. You go through that whole process, and actually I still quite like the look of that investment. And then if it's a loan, there'll be loan agreements that are put in place. And if it's an equity raise, there'll be shareholder agreements that are put in place alongside articles. So, and all of that information is stored against your portfolio online. So if you then go to your portfolio, it lists all of the projects that you're part of. And under each of those projects, it's the core documentation, a summary of all the updates that have been provided, questions and answers. The forum then becomes private. So when a project is raising funds, the forum is available to all registered users to ask questions and have that conversation. When the project closes, it's only available to those people who have invested in that project, because then it becomes a private mechanism for all the shareholders or the lenders to actually talk about the project alongside the developer.
So really, it's a great way to also learn about property development as well, right?
Yeah,
absolutely, and that's the beauty of it. And so, if you're absolutely new to property, you might want to start with learning about, I don't know, a renovation or a planning gain opportunity or a small scale build or something like that, right? And so that might be where you start. But for others who've been in property and they've done, title splits and they've done conversions of homes into a handful of units, they might actually, we do have investors who then invest into larger scale commercial to resi developments, for example, or a build of 20 houses or 30 houses or something, because that's that next level of growth. And so, and to do those projects by yourself might not be feasible, but actually learning about them and learning about the nuances of those makes a lot of sense if you can enter into that space at a lower amount. The other thing is, it's like if you're completely new, you only know, in fact, for everybody, you only know what you know. And so where you have forums and you ask certain questions, there'll be other people who are asking different questions. And so again, that's a really good way of just being able to understand what's going on and get a feel of what's happening in live projects. And it's a really nice way to be able to do that.
Yeah. Now I know you mentioned your experience as investors.
Sorry, yeah.
And that's
lower this a bit more. Making your chin sharp. There you go. Sorry. Another edit.
That's all right. So I know you mentioned your experience as investors of buy-to-let properties and also overseas. What's your property journey been like since you started?
So the very first one was while I was at college. Did it with my brother. Fairly straightforward, but we still learned quite a lot because there's so much detail in anything and everything. And then after that, we started buying properties in, was it Folkestone first? Properties in Folkestone. Really interesting story of Folkestone. So there were whole areas that were problem areas. And one of the things they did is they changed an office block from a council office to a police station, and overnight the area changed. So we could see that kind of change happening. We knew that Eurotunnel was coming in soon, so the tunnel. So that was going to be a big boost for the area.
Eurotunnel was there.
Before, so the Channel Tunnel, wasn't it?
Yeah, that was there.
Yeah. So that was coming. Was it already there?
Yeah.
Okay, that was already there. And there was some local, I think the owners of Saga are from the area, and they were putting millions into developing it. So we thought, right, that's the place to buy. And we could see the massive change in values already, but they had a long way to go still. So we got involved and we bought our first flat, ripped everything out ourselves, and then got it all built up and got it rented out, and just went through and bought, I think we had 4, 5 at one point. One of them was an old converted school, really old converted school, beautiful property, not actually great as a rental property. And those are the kind of things you learn.
School bell, which is like big round, like
wow.
big. They made a right racket, and that was part of the fire alarm system. It was the most stunning but quirky building. It was absolutely beautiful, but as a rental property, it was a nightmare.
Yeah.
It was in a greatly listed building as well, which didn't help, and so we let that one go. I just remember the first one we did though. we got the property and we thought, you know what, we're just going to wreck it and do it ourselves in terms of as much as we can. So we started down this road, and I just remember we'd been skiing and I damaged my knee. And so I had this really dicky leg, and I just remember Davin walking into the property and seeing me kicking a wall over with my with my good leg. At which point it was like, what are you doing? I said, I'm not using my dodgy leg, I'm using my good one.
She was, of course, standing on her dodgy leg. Which was
so
then
you have two dodgy legs then by the end of it.
Yeah. They're absolutely stunning properties, and what was coming was there was talk of a fast rail link into London. Yes. So Channel Tunnel was obviously in play, but it was a fast rail link, and since that time, it's an hour into London, into King's Cross, but you can live by the sea.
Yeah, it's interesting because we thought a further increase in value would happen as soon as that came. It took a long time for that value to come. It's quite interesting, but it is now. It's that place where, as Tuk said, it's a bit like Brighton. You can live on the seaside at the weekends, or even during the week, and commute into central London straight in. And so work in London, live at the seaside. I think one of the really interesting things is going to be there's already increased demand of people looking at houses with gardens based on what's going on right now. You translate that up to houses next to the sea, but you can still live in London. I think it could be quite good for Folkestone and places like it. So then we also started buying in Wales, in the valleys, so relatively cheap properties. Again, complete gut and redo, literally taking back to brick, taking the floors out, all of that, and then just rebuilding everything inside. It's just a shell. And we've got quite a few of those, and that worked well.
Yeah, and our home was also a huge project for us. So this is where we learned, about proper renovation, I think. Proper build, really, isn't it? 'Cause it's full build. Renovation, yeah. So we'd actually bought this property, and we'd just gone to see it on the off chance. We thought, we don't know how his garden works, so it's more out of curiosity, and we were really fussy. And this was our first home, and we'd seen about 60 homes, didn't like any of them, and thought, let's go and have a look at this one, and absolutely fell in love with it. The garden was so overgrown because it sides onto forest that we couldn't see the end of it, so we didn't know where the garden stopped and the forest started. And actually, when we started clearing out, we found 3 climbing frames which we couldn't see. It was remarkable. But that was an absolute gut and redo. So we lived in one room for 6 months whilst the rest of the house was being done up. And then we, under PD, so it's probably about a month after PD came out, we put in for an application to build an extension to our garden or to our house. It was going to be an original separate dwelling, but then we linked the two. And that was 95 square meters. So it was pretty substantial. So we learned a lot in terms of the build process for that as well. So we've sort of done different things. And then France was the last one, wasn't it? The last area, yes. Really. So buying in Chamonix.
I'm not sure, was that? So it was the last, well, we kind of did that quite a while ago. So when we bought a little apartment in France, and it was still in francs when we bought it, so that's how long ago it was. And we spent a fair bit of time doing research and visiting places, and then when this one came up, it was an absolute bargain, and we knew that the moment we walked, the price looked, we thought there's something wrong with it, it's too cheap. But actually, the way these apartment blocks are built, there's only so much that can be wrong. So we went and had a look, looked absolutely fine, found out that basically it's a chap that would just wanted to get rid of it, sell it cheap. He could no longer enjoy the mountains, So we knew. So we walked across Chamonix, 20 minutes, put the offer in, which is binding in France. And that was it. We started the buying process. It was fascinating, buying in a completely different language, in a different legal process, having to get all the contracts and forms translated. But it worked, and it was good. The way the French mortgage worked was really good, because it changed the timeline of the mortgage rather than how much you pay. So you always pay the same amount. Interest rates dropped, so it just got quicker and quicker. And we ended up just owning it outright fairly quickly. And it's really nice just having a little bolt hole, because it's an hour to Geneva, an hour in the car, and you're there in the Alps.
Yeah, that sounds fantastic.
Yeah, and we've done sort of empty properties and things like that as well, and brought those back to life. Since we've been crowdfunding, in terms of our own projects, we've sort of put that on hold. But what we do is invest through the platform into projects still. So it keeps us with what's going on from a different development standpoint. It's just not our own projects.
If you want to keep up to date with all our latest content, then make sure to subscribe, hit us with a like on Facebook and Instagram, and remember, stay healthy and wealthy.